An index fund is an investment that tracks particular markets and is typically made up of stocks or bonds. In fact, investor Warren Buffett once said, "A low-cost index fund is the most sensible equity investment for the great majority of investors." All of the index funds discussed in this video have been around for over 30 years, which historically has shown to build strong wealth for investors as they come at a low cost, require little time and financial knowledge, while maintaining diversification to reduce that risk of losing money in the market. And if you are at all confused on index funds, I highly recommend you check out my Fidelity Index Funds for Beginners video, which I will leave a link in the description below and a pop-up right here. With that being said, this video is going to go over the 4 all-time best Fidelity Index funds to own, especially if you are a beginner. Starting off with the Fidelity 500, ticker symbol FXAIX. This fund tracks the S&P 500 index, which is an index that seeks to provide investment results that correspond to the performance of 500 of the largest publicly traded companies listed on the US stock exchanges. And because all these companies are listed on US stock exchanges, this is considered to be a domestic fund, with all the companies that are included in this specific fund being large cap stocks, which means they are companies that contain a market cap of $10 billion or more. Currently, the Fidelity 500 Index Fund contains 506 stocks inside of the fund, with some of the top holdings being Apple, Microsoft, and Amazon. This index is also market cap weighted, which means the company's weight in the index is based on their size. As of the creation of this video, Apple is the biggest company in the index and contains a weight of 6.03%. And the top 10 holdings cover nearly 25% of the entire portfolio. By combining the size of every company that is in this index, the S&P 500 is known to cover roughly 80% of the entire US stock market. And some of the sectors included in this fund consist of technology, healthcare, consumer discretionary, and many more, which these sectors are all given a weighted percentage of the entire index based off of the companies that are inside of each sector, with the technology sector alone containing the most value at 27.48%. So according to this index, this shows to us that the technology sector contains the most business in the United States. The S&P 500 has historically proven to generate great returns, with the Fidelity 500 Index Fund having an average annual return in the past 5 years of 9.53%, with a past 10-year average return of 12.67%, and the lifetime average return for the S&P 500 Index has seen 10.55% per year, which goes all the way back to 1957. To demonstrate, if you invested $10,000 into this fund 10 years ago, that would now be nearly $33,000. The most important part about index fund investing is that the returns are seen when you hold the investments for a long period. This is because there have been several years where the index has seen major downturns, and if you were to sell it off, your future portfolio's potential would have a significant impact negatively. In fact, in 2008 alone, the S&P 500 dropped roughly 38%, which means if you had $1 million invested, that would have dropped to $620,000. But if you were to have held on to that $620,000 in 2008, without even adding more contributions, your balance would have grown all the way up to $2.27 million. Now, the Fidelity 500 Index Fund is an extremely cheap fund to own, as its expense ratio, which is the total cost per year it takes to own this fund, is 0.015%. That means for every $10,000 invested, you are only paying the price of a pack of gum per year in fees. Although an S&P 500 index fund is considered to be one of the best index funds to own, economic development and political issues could strain an economy at any instant, which is why I will be discussing foreign and bond funds later in this video. But with that being said, that is the Fidelity 500 Index Fund, ticker symbol FXAIX. Let's now move on to the number 2 index fund, which is another domestic fund, and that is the Fidelity Total Market Index Fund, ticker symbol FSKAX. This fund is known to track the Dow Jones US Total Stock Market Index, which means the fund seeks to provide investment results that correspond to the total return of a broad range of US stocks, including small, mid, and large cap companies. So instead of just the S&P 500 exposure, we are now exposed to the total US stock market. Currently, the Fidelity Total Market Index Fund holds 3,992 stocks in the fund, with some of the top holdings being Apple, Microsoft, and Amazon. And yes, these are the exact same top 10 holdings as the Fidelity 500 because this fund is also market cap weighted and it covers publicly traded companies in the US. The top 10 holdings in this fund cover roughly 20% of the entire portfolio, which leaves the other 3,982 stocks with 80% of the weight. This means the total market index has more exposure to US companies, but may contain more risk and volatility due to more speculative investments that are inside of the fund. Although companies you may have heard of like Reshape Life Science, Springbid Holdings, and Brainstorm Cell Therapeutics. Wait, you don't know these? Well, I don't either, and that is because these companies are some of the smallest ones in the fund and are ones that have a potential to see massive growth. And companies that are unheard of today could potentially be the next Apple or Amazon. So spreading your investments and gaining more exposure can allow you to have more opportunity while maintaining risk. The Total Market Index Fund has seen an average annual return over the past 5 years of 9% and over the last 10 years, 12.2%. But the lifetime returns of the Dow Jones US Total Stock Market Index has been roughly 8%, which is since its launch date in 1987. To demonstrate, if you invested $10,000 into the Fidelity Total Market Index Fund 10 years ago, you would now have nearly $32,000 today. Now, the Total Market Index Fund is an extremely cheap fund to own, as its expense ratio is the same as the Fidelity 500. It's 0.015%, which that means for every $10,000 invested, you are only paying $1.50 in fees per year. With that being said, that is the Fidelity Total Market Index Fund, ticker symbol FSKAX. Let's now move on to the number 3 index fund, which is an international fund called the Fidelity Total International Index Fund, ticker symbol FTIHX. This fund is also known to track stocks that are in the MSCI All Country World Index, which means this international fund seeks to provide investment results that correspond to the total return of foreign developed and emerging markets. What this means is that this fund invests into companies only outside of the US. See, if you invest all your money into the US stock market and all of a sudden the economy began to suffer, your portfolio would take a massive hit, and that can significantly alter the amount of time and work you have to do until you can retire. This is why when it comes to investing, the wealthiest people invest into multiple markets, such as real estate, gold, stocks, and many more. Something I learned in an investments class during my master's program is that when it comes to personal wealth management, the goal is to not lose money. And to do this, you have to reduce the overall risk of your portfolio, which means you have to own multiple assets that perform differently so that no single investment can hurt you too much. Currently, the Fidelity Total International Index Fund holds 5,079 stocks in the fund, and this fund is a market cap weighted fund that consists of small, mid, and large cap companies, with some of the top holdings being Taiwan Semiconductor, Nestle, and Tencent. The top 10 holdings for this fund makes up just less than 10% of the weight for the entire fund. This Total International Index Fund over the past 5 years has seen an average annual return of 1.25%, and since its creation in 2016, it averages 5.84%. And the lifetime returns of the MSCI All World excluding US index that this fund tracks has seen 5.99% annually, which goes all the way back to 1986. Now, this fund comes at an expense ratio of 0.08%, which means that every $10,000 invested, you would pay the price of a pizza per year in fees. And with that being said, that is the Fidelity Total International Fund, ticker symbol FTIHX. Moving on to the number 4 index fund, which is a bond fund, is the Fidelity US Bond Index Fund, ticker symbol FXNAX. This fund seeks to provide investment results that correspond to the aggregate price and interest performance of the debt securities in the Bloomberg US Aggregate Bond Index. The Bloomberg US Aggregate Bond Index is an unmanaged market cap weighted index for investment grade fixed rate debt issues that include government, corporate, asset-backed, and mortgage-backed securities with maturities of at least 1 year. The pros to buying a bond index fund is that they are much easier to buy and and sell than individual bonds. They also allow you to invest any amount of money and can automatically reinvest the interest payments for you. In addition to that, most bond funds pay interest on a monthly basis instead of individual bonds that are typically semi-annually. And when you buy individual bonds, you can predict the future market value, where bond funds make that difficult. This bond fund contains 9,069 holdings, with the biggest weight being roughly 43% from US Treasury bonds, then mortgage-backed securities at 27%, and corporate bonds at 24%. The fund has also seen an average annual return over the past 5 years of 0.84%, and over the past 10 years, 1.39%. Now, this fund comes at an expense ratio of 0.025%, which means that every $10,000 invested, you would pay $2.50 per year in fees. Now, these 4 index funds can be combined to create what is called a 3-fund portfolio, which consists of domestic US stocks, foreign, which are non-US stocks, and bonds. I will make a video in the future related to managing a 3-fund portfolio. I will leave a pop-up here and link in the description below once that is created. Now, that covers the 4 best Fidelity index funds to own. Let me know in the comments below what your favorites are, and if you're interested in any other content about Fidelity's platforms, different types of funds, or any topic related to money, definitely consider subscribing to the channel and checking out other videos that I have created.